What up, world? I'm Steve, founder and CEO of CryptoCrewUniversity.com, home of the #1 crypto classes. If you want to take this complex world of crypto, make it super simple so that you have more success, this channel is for you. Hit that subscribe button, join the movement, and hit that like button. We are in an absolutely critical point in Bitcoin's history. We have a death cross that's rapidly approaching. Is this going to put Bitcoin and crypto in a bear market for the next year, or is this going to be a major fake out? The third option would also shock everybody. Is it going to be an avoidance? In today's video, we're going to talk about the 3 distinctly most powerful scenarios and let the evidence in the chart speak for itself. I hope you guys are having a beautiful Wednesday. Happy Wednesday to you. Hope you have a smile on your face. Hope you're looking fresh and hope you're having a beautiful day. If you're watching this on Thursday, happy Thursday to you. And if you're watching this in the future, you are going to love this video. There's so much to talk about in this video. We're diving very deep into the charts today. Massive learning is going to happen today, and I can't wait. So Bitcoin has been on a parabolic run, as we know, for a few months, right? Then we had that gravestone doji candle, and we have been in a downtrend for 104 days. And you may see, well, Steve, Bitcoin is going up today. Doesn't this mean we're going to the moon? Just pump the brakes, right? We've been in a downtrend for 104 days. We're going to talk about the key levels to watch today, but don't get too emotional. Don't be like the herd. The herd is getting really emotional anytime Bitcoin goes up a little bit or down a little bit, but not us. We're level-headed. We take a couple steps back. So take a breath, breathe in that fresh air, and get ready to learn. So there's 3 distinct, powerful patterns that have played out over the course of 9 years. We're going to talk about those 3 distinct patterns and how powerful those scenarios are, and which scenario is going to happen as we approach this death cross. 3 very powerful patterns. So we're going to dive deep into the charts, and I cannot wait to share it with you. But if you're wondering, well, Steve, Bitcoin is going up today, what should we do? I want to give you one key right now, and we'll talk about it a little bit later. I would personally watch 9,004 to 10,000 and how we play with that level. And the reality is we need to get above 11,000 to start to change the trend. Remember, since the gravestone doji candle, which we called out 104 days ago, we've been in a distinct downtrend. There's no evidence in the chart yet to suggest we're reversing the trend. So just take a deep breath. Everything's going to be fine. We'll talk about everything you need to know in today's video. I want to give you some evidence, some facts, some figures. Those of you that watch my channel, you know I love the statistics, the facts, and only the price action in the charts. Let me share with you something. I've been lucky enough to talk to many of my students over the past few years on the phone. And what I learned is really shocking. I learned that on average, my students come into my YouTube videos and watch for 4 months before they sign up. So if you have only been watching my YouTube videos for a month, you've got some time. What else I learned is absolutely shocking. 91% of my students came into crypto with the mindset they can do it themselves. There's a whole bunch of free content out there. So I asked my students, well, what changed? You came in, you thought you could do it yourself, but in 4 months you signed up. What happened? And they said, Steve, the stupid trades. I was making stupid trades and I was losing money. And I love your videos. I connect with them deeply. I love the way you teach. So I signed up. 96% of my students had one major regret with my classes, and that's not signing up sooner. They said, Steve, if I had that knowledge that I learned in your classes back then, I wouldn't have made those stupid trades. I wouldn't have lost my money. So the lesson to you is, if you've signed up, if you've been watching my channel for 1 month, don't wait. Don't wait to start making those stupid trades. Avoid it all and sign up now. If you've been watching my channel for over 4 months, you're behind schedule. We've got to get you on schedule immediately. So here's how to sign up, avoid those stupid trades, avoid those stupid losses, and get on the right track today. You're going to sign up to the Diamond Combo if you don't want to miss any important content. The Diamond Combo contains all of our important classes, and it's for you if you've been in crypto for just a few months. It'll be the first link right down in the description, or go to cryptocrewuniversity.com. Save $600 with PayPal or credit card, save an extra $300 with Bitcoin or Ethereum. If you think you can skip the beginner, sign up to the gold. It includes everything the diamond has except the beginner. If you've been in crypto around 1 to 2 years, the gold will be perfect for you. Second link right down in the description. I'll link it for you inside the video as well, or go to cryptocrewuniversity.com. If you have any questions about the classes, email me right now. info@cryptocrewuniversity.com. The biggest question I'm constantly asked, Steve, which are the best classes for me? Email me right now, info@cryptocrewuniversity.com. So we're going to jump into our 3 distinct scenarios. And our first one is called fake out. Those of you who have been following my channel for a while, you probably started watching when I covered the bull markets and the bear markets, distinctly the death cross and the golden cross. Let me know in the comments down below if that's when you started watching. There's a high probability the answer is yes, because we covered them at length, and it really drew a lot of attention because at the times nobody was discussing these types of scenarios. So what we want to do is talk about the fake out. And those of you who've been watching for a while, you know that we covered at length how similar this run from our previous high in 2013 down to our low in 2015. We covered distinctly how similar these moves were. Let's refresh our brains a touch and then go into some details about this fake out because it's fascinating. We're going to cover these 5 things, right? So we're first going to cover the move below the 200 to the bottom. So what do we mean by that? We have 2 lines on our chart. We're on the daily chart, and in red we have the 200-day, and in the green the 50-day. Simply put, if you're not sure what a death cross is, that's when the 50-day moving average crosses below the 200-day, right? We're going to get into a lot more detail as we move forward, but let's keep it simple in the beginning. A golden cross is the exact opposite, 50-day moving above the 200-day. But what we want to identify is, we know that we had our price high in 2013. When did we first move below the 200-day? It was with this candle right here. And we're just going to take an idea of how many days did it take to get to our low. And we're talking about a little over 300. A little over 300 to go below the 200-day to our low price. We'll take that information and we'll go to today's chart. By the way, just real quick, there's been some questions on Twitter. Well, Steve, I'm not sure I understand this because what if the red line, the 200-day, is rising as we enter a death cross? Does that mean there's no death cross, no bear market? Let's just look at the evidence. Let's not use any emotional opinion. Let's just use the facts. We entered a bear market right here on March 31st, 2018 with the 200-day rising, and we entered a bear market for a little over a year, and it was a pretty ugly bear market. And if you go back to 2011, we did the same thing. We had a rising 200-day, and we went into a bear market for quite a while. It took 2 years for the price to make a new higher high, a new all-time high in 2011. 2 years. So take a look at the charts, and hopefully that clears up a little bit of this. Now, back to what we were talking about. The first pierce through of the 200-day to our bottom. First pierce through happened on February 1st, and to our bottom here. It's almost identical in the numbers. What was the other one? 322, and this one's 318. Almost identical, right? So let's go back and see what another category is. The 3-day death cross. Remember, we covered this 3-day death cross at length. We knew that back here in 2014, it took 23 days for the 3-day death cross to happen to reach our bottom. And we all remember where the 3-day death cross happened, here, right here. And guess what? It took about 23 days for us to reach our bottom. Coincidence? No. We were well prepared for the 3-day death cross. We covered that in multiple videos. We were well prepared for a dramatic drop, and the only price target we had was the 200-week moving average, which we fell directly to it. You know, and there was really nothing special about those calls. Nobody was talking about it at the time, and there's no pat on our back. There's nothing special about what we did. We just kept it simple and looked at the past charts, and we knew what to look for on the present charts. That's it, right? This is the channel where we keep it super simple. So hit that subscribe button and join the movement. Now it gets really fascinating. Take a look at this. Let's just identify what a fake out is. A fake out is a term used throughout trading, and it means a trader takes a position and then the market will do the exact opposite that the traders anticipated. It's quite shocking, right? A fake out happened here where we had a technical golden cross right towards our high, and we actually fell down dramatically after that, right? Forming a new bottoming candle, right? More so than the past few months. Not a new lower low, but a new low that shocked everybody and took it by storm. So the main question is, well, Steve, is this pattern repeating? Let's take a deeper dive, and it gets fascinating. Take a look at this. We're going to discover the days from the bottom to the top, meaning we made our bottom here. Remember, this is the 2014-2015 chart. We'll just go ahead and drag this down. So we're going to take a look at our bottom. How many days did it take to go from our absolute bottom to the top of the fake out? Let's just take a measured move here. So we are measuring the bottoming candle here to the top, and you talk about a little bit less than 200 days to go from our bottoming candle to the top, a little bit less than 200 days, because we want to understand, is this going to be a fake out, right? This, meaning this death cross that's rapidly approaching, is this going to be a fake out that shocks everybody, right? So let's just take an understanding of how many days from our bottom to our top. We remember it was about a little bit less than 200 days, and we want to go to our top candle here. Well, guess what? A little bit less than 200 days. So we're right on schedule in terms of it being a fake out so far. Let's take a further look. Let's see what happened with the price action. As we zoom in here in 2015, we had our low, and when did we cross above the 50-day? How many days from that point to get to our high of the fake out? So what we're doing is we're understanding, is it even a possibility that we're in a fake out? We're talking about 168 days from the point we crossed above the 50 to get to the high of the fake out. Well, if this is a fake out, this is our high. When did we cross above the 50-day? On this candle right here on January 6th. So we take January 6th to the high, 171. The last one was 168. So far, we're right on cue for it being a potential fake out. Now, we're going to go today through 3 distinct scenarios, and they're going to shock you. This is one scenario, the fake out scenario. We have 2 other scenarios that are really powerful, really distinct, and we're going to let the evidence in the chart speak for itself. There's going to be no emotional opinions and no news, just price action, just the evidence in the chart. And we're on a journey today, me and you, to really dive deep into this death cross that's approaching. It could be the biggest thing in 2019 going into 2020. We cannot leave any stone unturned. It's very important. What I will tell you is that this move, and by the way, let me know in the comments if you believe it to also be a fake out. But this move was about 100%. We can go ahead and take a quick measured move here, but I was think about 94. Yeah, 94%, right? The move present day is not 94%. It was 350. That's the major difference. That's the major difference. Yes, we have incredibly similar amount of days from the bottom to the top. We have incredible similar amount of days from the cross of the 50 to the top. Structurally, they're very similar. However, when you look at the percentages, that is where it's a major difference. This wasn't that big of a move. However, this move did create a higher high. We have to keep that in mind as well. It did create a higher high. So structurally, it makes sense because we had our high here, we made another high. However, that's the main difference. So as we move through this video, we're going to really come back to this fake out and see which scenario out of the three holds more weight. In the meantime, I want to get to this, the altcoin market. And this is something we covered back in July. This distinct chart is so powerful. And we gave you fair warning a few months ago, way back in July, when altcoin market was around 100 billion. And remember, a lot of folks were buying altcoins when the market was at 130 billion, right? We said when we were around 100 billion, watch this one level. That's it. One distinct level in the altcoin market, right? Excluding Bitcoin, we identified 63 billion. Why did we identify 63 billion? We're always looking left. When we look left, we say, okay, there were 1, 2, 3 monthly candles back here in 2017 holding distinct support. We broke the support with this large candle. Anytime you break a major level, whether it's support or resistance, any break will be a big candle every time because it takes a lot of power to push through a major level. So this big candle came in 1, 2, 3, 4 months. 4 months as critical resistance. Another month is critical support. So we went on this big rally. Everybody's excited. The only thing we were watching is the 63 billion. And we said, patience wins this game. My students will tell you, patience wins this game. And emotion is a money killer. So those that are patient and waited the 1, 2, 3 months, we came right down where we were supposed to. And last month held critical support, which we pointed out. And this month, so far, a bullish engulfing candle. So altcoins are looking great, as we pointed out for the past few months. But if we break below the 63 billion, yeah, there could be some pretty big trouble. So we'll pay close attention to that as we continue. Now, what I want to get to is a review from a student, and it's really going to connect with you. His name is Neil Hoffman, and Neil is probably a lot like you. Neil came into this space and said, you know what? I can do this on my own. There's a ton of free content. I'm going to read the books. I'm going to do the research, and I am going to do it on my own. Neil is probably a lot like your situation right now. But what Neil found out is, quote, the free content was worth exactly what I paid for it. 0. Neil went on to say he signed up to my classes and, quote, the classes cost a fraction of what I paid to go to college, yet Steve's classes are so much more useful. I would say on average a 30% gain on the majority of my trades. The cost of his classes is minuscule compared to the money I am now earning in crypto. Let this be a wake-up call. I want you to get on track. We know most students on average watch my YouTube channel for 4 months. Avoid these big mistakes. Avoid these mistakes of thinking that you could do it on your own and taking those big punches to the face. You can avoid all the punches to the face and get on track by signing up right now. You're going to sign up to the Diamond Combo if you're really new to crypto. Been in crypto a few months, Diamond Combo, perfect for you. And by the way, Diamond Combo includes all of our class content, so you do not miss anything. Diamond Combo, first link right down in the description. Look right now, right down in the description. I'll link it for you inside the video, or go to cryptocrewuniversity.com. Sign up to the gold. The gold will be perfect for you if you've been in crypto 1 to 2 years. 1 to 2 years, gold combo, perfect for you. Second link, look right down in the description. I'll link it for you in the video, or go to cryptocrewuniversity.com. Again, save $300 right now, PayPal credit card, and save an extra $300 with Bitcoin or Ethereum. Biggest question I get asked, Steve, which class is the best for me? If you have that question, email me right now, info@cryptocrewuniversity.com, info@cryptocrewuniversity.com. I look forward to welcome you in. Okay. Scenario number 2 is underway. Scenario number 2 is a fascinating one. This one would shock a lot of people. And this one is going to shock you when I explain the evidence, because it's quite mind-blowing. And I can't wait to share it with you. We call this one the avoidance. What if we're in this type of situation where we had our high, we were in the midst of a strong bull run, we had our high, we just had a pretty big correction, and we avoided the death cross, and we continued into a massive bull run, sending the second wave absolutely parabolic. Steve, what if we're in this situation? Please give us some evidence that we're here. And boy, do I have some really good evidence for you. Watch this. So we're going to compare this. And again, this is 2013. We're going to compare it to today. So take a look at this red candle. This red candle is identifying the only time in the history of Bitcoin that we had a candle close below the 200-day and maintained a bull run. The only time we ever had a candle close below the 200-day, we went into a bear market. This was the only time that we defied that rule. But not just that. We'll take it a step further. Remember this date, July 2013. We talked about it in the last video, but I'm going to give you some more evidence today. July 2013. Why is that important? We talked at length about the 21-week moving average. Incredibly powerful. But why is July 2013 important? We know that we never went below the 21-week moving average during a bull market. We never. Only one time. And that's where this big green candle is. And it happens to be July 2013. That means that not only were we below the 200-day in July, we were below the 21-week. And I'll take it one step further and share with you something I didn't share yet. And I meant to share this in last week's video, but let me share it now because it's fascinating. What I want you to do is take a look at the bottom of the screen, the stochastic RSI. What we're going to do is just understand this big, bold, white line at the 80 mark. Anytime you're dealing with a stochastics RSI, the 80 is very important. Again, this is where we take this complex world of crypto, make it super simple so that you have more success. Hit that subscribe button, join the movement, and everybody hit that thumbs up button now. I appreciate you. I just want to take a second and say, I'm blessed. I'm blessed to be able to make these videos and to be able to help people see things through a different lens. This is a dream come true. I grew up in a rough situation as a kid, and I had one goal. I wanted to help people with money. And I get to do that every day with these videos and the movement that we have. So thank you. Thank you from the bottom of my heart. This is a dream come true. What I'll tell you is take a look at how much time we're above the 80 on the weekly chart. We're on the weekly chart right now. So you can see we're above the 80, not for very long. Not for very long. Outside of this move, which we'll get back to in a minute. But not very long above the 80, not very long, not very long. And this is, mind you, 9 years of history. 9 years of history, not very long above the 80. There were 2 distinct times in history that we were above the 80 for an extended period of time. And they are 2 fascinating ones. Here's one of them, just recently. We've covered this maybe 3-4 months ago. but there's an absolute distinction to this. So back here was the longest time in history that we were above the 80 until recently. And why it's important is look at this big green arrow. Remember the July 2013? Guess what happened? We were above the 80 for well over 100 days. It's the only time in history we had done that. 126 days above the 80, which means there was a lot of momentum in the market. Remember, stochastics RSI, momentum. There was a lot of momentum in the market, a very high level for an extended period of time. We're talking about 126 days. And then we reached our high, and then our stochastics fell to the bottom. And by the way, when it fell to the bottom, that's when we had our two candles below the 21 and our candle below the 200. That scenario is exactly what just played out. Take a look. When we fast forward here, we had a parabolic move. We had a massive amount of momentum. This is the only other time in history where we were above the 80 for over 100 days. And by the way, right at the bottom of our stochastics, ding, 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 21-day moving average, two candles below, and our candles below the 200-day. It's identical to that scenario. Isn't that fascinating? Let's go back to this chart. So we know that, okay, below the 200, below the 21, we know that stochastics above the 80 for that extended period of time, all those things line up to the T. Let's take a deeper look. What I will tell you is take a look at the angle at which the 50-day was moving, right? The 50-day in green was not at a steep angle, was a very slow angle. Why? Because there wasn't a lot of price movements. And what we did to avoid the death cross was we had a pretty big move up. This may not look like a big move to you, but this is a 50% move in price. So we only stayed below momentarily, and then boom, we moved up 50%. And these are daily candles in about a week. So we went below the 200-day. In 1 week, we went up 50%, which is very different than today. Today, we have a very steep slope, and we spent many, many days below the 200-day, and we have not moved up 50%. A 50% move from our low would be pretty significant. It would put us up, up around 11,000. So we haven't seen that type of move, so we can't compare it exactly to that avoidance. However, some of those facts are very, very eye-opening. So the main differences with the avoidance are a lot of candles below the 200-day, a significant steep with the angle at which the 50-day is coming down, and we haven't seen a parabolic run directly after that. You remember, back in 2013, 1 week later, we were already up 50%. Here we are 1 week later, and we're still below the 200-day. So that's the main difference in terms of the avoidance. But again, still fascinating. So far we've got the fake out, and we have the avoidance. We need to get to the third thing that we're going to talk about in today's video. But I want to hear from you so far. What do you think it is? Do you think it's the avoidance? Do you think that we're going to have a fake out? And do you know what the third one is? We're going to get to that in a moment. But some fascinating information as we dive deep together into these markets and the moves in the markets. Remember, what a lot of people get wrong is the idea, the concept of the death cross. They think, oh, once you have a death cross, price drops so drastically and really quickly. That's completely false. A death cross is a true enter into a bear market, and bear markets are a big picture cycle. They're market moves that usually happen. Usually bear markets are about a year. We're not talking about a couple days. And again, a lot of people today will be excited. Well, Steve, Bitcoin is up to whatever it is now, 8,006, 8,008, whatever it is now. It's almost irrelevant. because we're still when you take a couple steps back, we're still in a downtrend. We've been in a downtrend for 104 days. In order to change that downtrend, we would need to get above 11,000. So if we're above 11,000, okay, we could be a little bit, excited, right? But if we're at 8,008 or whatever we're at, that's really not significant. The main levels that I'll give you are, watch this 9,004 area as resistance. If you look left, this was critical support back on July 16th, back on July 28th, back on August 15th, and back on August 29th. 4 distinct times we held critical support. What do we know? If we look left, that critical support is going to be critical resistance. So 9,004 should be pretty heavy resistance. I'm very curious to see what Bitcoin does with 9,004 to 10,000. That range, that channel is going to be pretty strong resistance. But again, if we can get above 11,000, we're looking good. If we can't, it's going to be a failed rally. So just stay calm, stay cool, stay collected. Don't follow the herd. The herd is jumping around in their seats because Bitcoin is up $10 in the last 10 minutes and they're freaking out. But we don't watch that small time frame of charts. We take a step back so that we see the big picture very clearly and distinctly, so that we're not using emotion. We know emotion is a money killer. So we threw that out the window already. But those are the areas I'm watching. Now let's get to scenario number 3. Before we do that, I want to share with you an idea from John P., a review from John P. that says, quote, "This man is a legend." I like that title. John P. was very, very similar to you and very similar to what we've seen so far today. Entered crypto, thought he could do it on his own. John P. was reading the books, doing the research, watching all the free content, and thinking he could do it on his own. This should be easy. But what he realized is he started making some really terrible trades, and then started making some more terrible trades, and then some more terrible trades. And he lost money. And the months go by, and he said, you know what? I'm done with that. I'm signing up to Steve's classes. And he signed up, and he said, quote, "I've been gambling with my money and struggling to learn on my own. Today, I have gained more confidence and patience. I already made 182% on his first trade after my classes." Again, today's lesson for you is don't wait. Sign up now and avoid all those headaches. What we learned from my students, 96% of them, 96% of my students regretted not signing up earlier, because I said, Steve, if I knew what I learned in your classes back then, I wouldn't have made those stupid trades and I wouldn't have lost all my money. Don't live with regret. Sign up now. You're going to sign up to the Diamond Combo if you are new to crypto and you don't want to miss any important content. Diamond Combo, perfect for you. First link right down in the description, or go to cryptocrewuniversity.com. If you have been in crypto around 1 to 2 years, the Gold Combo, perfect for you. You're going to absolutely love it. It's our top seller by far. Second link, look right down in the description. I'll link it for you inside the video as well, or go to cryptocrewuniversity.com. Again, biggest question I get asked, Steve, which classes are the best for me? Please let me know for my situation. Email me right now with that question if you have that question. info@cryptocrewuniversity.com. info@cryptocrewuniversity.com. Remember, these savings are PayPal credit card. If you sign up with Bitcoin or Ethereum, extra $300 for either combo. Now, let's get to scenario number 3. What I want to preface this scenario with is popular opinion. If we were to take a poll right now of everybody watching or everyone in the crypto space, I would venture to guess that over 90% of the humans would say Bitcoin in 1 year from now would be at a higher price. Think about it. If you polled the audience and said, do you think Bitcoin is going to be at a higher price 1 year from now? 90% of people will say, yeah, absolutely. Of course we're going to be at a higher price 1 year from now. And we know, and this is tough to say, but we know that oftentimes when we do the opposite of the herd, that's what actually happens. So I just want to put that thought in your mind that maybe 1 year from now, we are at a lower price than 8,800. Something to think about. It's not a fun thing to think about. I would wish that doesn't happen. But as a trader, I need you to think about both sides of the scenario. If you get emotionally attached to, of course, Bitcoin is going to the moon 1 year from now, probably going to be $1 million, maybe $1 trillion. That's a pun. I hope you understand that. But the point is, you have to look at both sides and understand it from a chart perspective, not an emotional tie. Anytime you use emotion is a money killer, right? So I'm not saying, oh yeah, of course, Bitcoin is going to be less than it is now 1 year from now. What I'm saying is we have to be smart. You have to think about clearly what's going on in the markets, clearly what's going on with the price action, and we have to see the big picture. So the third scenario is, what if we enter a textbook bear market, right? Third scenario, we're going to look at these things. And again, I want to point out, I saw a lot of comments on Twitter asking, well, Steve, can we go into a bear market if the 200-day is rising? If we look at history, we've done it a few times. So the answer would be yes. The answer would be yes. Remember, we entered a bear market March 31st, right? And this is at a time when nobody thought we were entering a bear market. Nobody wanted to come true with saying we're entering a bear market because everybody at this time thought we were going a lot higher, 10,000, 20,000, 40,000, 50,000. They thought that this was a short-term correction from our high and that, of course, we're going higher. We ended up going into a bear market for a year. And that was technically on March 31st. However, we made this video on March 16th, a couple weeks prior. And we were the first persons to talk about it on YouTube. And we called it Bitcoin Death Cross Warning. Inside this video, we talked about the death cross that's coming up. And in this video, we said we would go into a bear market for the next year. It's funny to go back and look at the comments because people ripped me apart. They said there's no possible chance that would ever happen that we are going to 30,000 so fast. We went into a bear market for the next year. It wasn't a popular opinion, but again, the markets always do the opposite of popular opinion. So if we look at this and we say, okay, what are the similarities? Because we're going to compare this chart to present day. What I want to say is look at the structure. We had our price high, 20,000. What did we do after that? We held critical support on the 50-day. We were trying to maintain that bullish momentum. Remember, we had a lot of bullish momentum behind us. And we came down pretty heavily and held critical support on the 50-day. What happened here? We had a really bullish case here. We had a parabolic move. We came down and we tried for an extended period of time to hold support on that 50-day to maintain our bullish case. But we just couldn't. And we broke through, piercing through the 200-day. And this could be very similar to what the next move is. Look at what happened after we moved below the 200-day. We rallied up and then got rejected around the 50-day. That could be what the next few weeks look like in crypto. Just a little foreshadowing, but this is pretty expected, right? What you could see is a price move up here around 9,006 to 10,000, 9,004 to 10,000, and we see some resistance. This is when a lot of people will get excited, and it would be marked as another failed rally. Our first was here. Our second failed rally was here in August. Our third failed rally could be within the next few weeks around 9,004 to 10,000. It's something to watch. I know it's not a popular thing to talk about. You probably don't want to hear about it, but I always tell you the truth of what the charts are saying. I never tell you what you want to hear, or we would make videos every day about Bitcoin going to the moon, going to $1 million, going to $1 trillion, and we would make those kind of videos, but we don't. We make videos that are based on facts, based on reality, and only the price action, never the news. So this is a scenario I need you to understand, right? So what we had back here was, as we were approaching a death cross, we had to move below the 200-day. We rallied back up. People got really excited, going back to the moon, and then we fell back down below the 200-day, ultimately falling into a bear market, which lasted a year. So let's take a look at our okay, so here's another situation. This is quite fascinating. We're going to take a look at number 5 here. How high did price get above the 50-day when we were at our peak? Okay, so we're going to measure from the high down, straight down to the 50-day, and it's about 50%. It's pretty high. We're going to measure down to the 200-day, 73%. So we were very far. This is a parabolic run, right? In 2017, 50% above here, 73% above here. Let's just get an understanding of, are we anywhere in the ballpark, right? We can't get all the way up there. Whoops. But what we understand is, just hypothetically, we're at 37%, right? 37% above the 50-day. And we're not getting all the way up there, but 62%. So it's pretty similar. We were in a very parabolic run, present day, right? This was a really parabolic run. We talked about how unhealthy this was as we were going up, which, by the way, was a very unpopular thing to say. And we said that the rally was over at 14,000 because of the gravestone doji candle, which people tried to beat us over the head with that too, because we called the trend over, and everyone thought we were going to 20, 30, 40, and we ended up going on a downturn for 104 days. So when we look at the 3 scenarios, I want to hear your opinions right now. Do you think it's a fake out? Do you think it's avoidance, or do you think it's a classic bear market? I would venture to guess the high majority of people will say it's a fake out. There's a lot of evidence to suggest that as well. We need to keep a close eye on how this is developing post breakout, right? It's really clear that this was pretty quick. This was a pretty quick. We're already 104 days since our top, okay? Let's just get an understanding from the top to the bottom here. We talk about 40 days. We're already at 104. So we have to keep a close eye on how this is developing over the next couple months. Here's what I'll be watching. I'm going to be watching how we interact with 9,004 to 10,000. And that's going to be the key. If you see us get rejected down from that, okay, we might be in for more trouble than one thinks. We need to get above 11,000 to start to change the trend. Okay, we're in a clear downtrend. And what seems unlikely right now is scenario number 2, being an avoidance. Just given the mathematical angles at which we were coming down here and the ones at which we're coming up now. And again, back here with the avoidance, we went on a really parabolic run directly after we reached below the 200-day. We went up 50%, remember? We haven't done that today. We're up, 10% at best. So there's a big difference there. So I think it's between the fake out and a real distinct bear market. And again, if you look at the big picture and you take a poll, nobody expects us to enter a bear market right now for the next year. That's a very unpopular opinion, and normally unpopular opinions become true. So we really got to take into consideration and pay close attention to this type of market structure that could be very dangerous, right? So we would hope that it's a fake out, but again, there's absolutely no way to tell as we speak. It's really dependent on how we interact with 9004, how we interact with the 21-week moving average, and what we do with support and resistance, and that's going to dictate the future. So we're going to keep you very up to date, right? Hit that subscribe button, join the movement. This is where we keep this complex world of crypto super simple so that you have more success. And now we're going to get into Steve's secrets to success. Oh, a shout out to the students. If you're a student, I emailed out everybody. We've got a ton of feedback, but I asked your opinion. What do you want to see on the next bonus class? So I'm going to be building a bonus class just for you, my students, on the topic that you want to see right now. So send me an email, answer that email chain, and we'll get your data into our email system and see which topic is the winner. Again, if you haven't subscribed yet, what are you waiting for? If you haven't hit that thumbs up yet, do that right now. Hit that thumbs up button. Show your support. Ooh, a quick update on my son. He has his first 3 little teeth poking through, so it's not really a fun time for him. It's a little bit painful, but that's really special. It's really special being a parent. I'm just absolutely in love with it, so I want to share a little bit of tidbits of information here for you. Steve's Secrets to Success. This is a powerful one, and we're calling it Live Your Dream. You have a dream. You've probably had a dream for many, many years, but you probably have the mindset of, you know what, Steve, I'm a little bit too old to live my dream now. I've got kids and I'm a little bit old and I need to save for my retirement. So I know that you're thinking about your dream right now, and you probably have some things that are holding you back from doing it. Maybe you wanted to travel more. Maybe your dream is to quit that job that you have right now because you really hate it. Maybe you want to go live on the beach in some different countries. Maybe you want to be a professional crypto trader. Whatever your dream is, go do it. You are the only thing standing in between you and the success of your dream. That's it. There's nobody else there, and I guarantee you, you will regret it in 20 years from now if you don't chase your dream. Think about it. In 20 years from now, do you still want to be thinking, man, I wish I did that. I wish I really chased that dream. You don't want to live like that. Go do it. Go do it now. I'm living proof. I had a dream as a little kid. We grew up in a tough situation. I said, you know what? When I get older, I'm going to help people with money. That's what I'm going to do. I don't know how I'm going to do it. I don't know how it's going to happen, but that's what I'm going to do. And that was when I was, 10 years old. 10 years old. And then I got a little bit older and I went the traditional route. I went to college and then I got a normal person job, corporate America, and I did the normal things. And then at about 23, I said to myself, you know what? This is not the life I wanted when I was a kid. I want to go travel the world. I want to be my own boss. I want to impact the world more than I am now, and I want to help people with money. That's what I wanted to do. So I left all that crap. I left the USA, and I went out into the world, and I chased my dream, and it was the best thing I ever did. And I don't care if you're 90 years old or 20 years old. Chase your dream now. There's no time like the present. In 20 years from now, I guarantee you're going to regret it if you're not going to do it. And start small. I guarantee you can do it. You can do your dream. Believe in yourself. You can do it, and you will do it. So that's my motivation for you today about living your dream. Oh, also real quick, I got a lot of feedback about the video 2 weeks ago where I said it takes me 3 days to make these videos. And 2 weeks ago, I lost internet. It was a ridiculous situation. I was bending over backwards because I'm a man of my word to get the video out in time. And I made it in like 5 hours. And in my opinion, it was terrible. And the comments showed it. There was a lot of confusion about what exactly were the charts saying. And there was confusion about different scenarios. And it just wasn't buttoned up for me personally. I got a lot of feedback from the general population, a lot of students and a lot of people that said, Steve, the video was incredible. I didn't notice a difference. But I saw a lot of comments that there was some confusion. It's very difficult to make a coherent video covering multiple things for 45 minutes and have everything crystal clear and everything buttoned up and every chart buttoned up and every scenario buttoned up. That's very difficult to do. So I just wanted to bring it to your attention that I appreciate the feedback. I appreciate the support. I thought the video was not very good because it wasn't as professionally buttoned up as I like when I produce a video, but I appreciate the support. Last but not least, just to thank you from the bottom of my heart. This is really special for me to be able to come on, provide some different takes on charts using my experience. I've been in charting for 19 years and I have a lot of learning. I made a ton of mistakes when I was a kid. When I'm 16, 17, 18, 19. I thought, I thought I know what I'm doing at this age, and that was not the case. I was really terrible. But I didn't know it at the time. It took me a couple of years to realize, all right, I'm young, I'm dumb, I made a lot of stupid mistakes. It's time to get on the right track. So I want to help you avoid all that crap. I've taken my 19 years of experience and I condensed it down into the most important classes to help change people's lives. That's been my dream. That's been what I've been doing, focused on for years. And that's what I'm continue to focus on, is changing lives. I don't want to see you make the same mistakes I made when I was a dumb teenager. I already made all the mistakes you can make because I thought I really knew what I was doing. Through my college years, I got a little bit better, a little more buttoned up, and continued to progress, especially after college when I didn't have to study all day, where I could focus on charting. It was a big difference. So I want to help you avoid all those silly mistakes. So that's why I'm here. That's my passion in life, and giving back and everything. And the support of the community is incredible. So just a thank you from the bottom of my heart. And let's continue to build this special movement together. So I hope you have a beautiful rest of your day. I'll see you right back here next Wednesday. Peace and love to you. Have a beautiful rest of your day, and click on those boxes right now to watch some of our other videos. Peace and love to the Crypto Crew.